Hello and welcome. Today, in this discussion brought to you by the expert team at My Tax Accountant, we're tackling a question that can cause a lot of sleepless nights. Does HMRC use debt collectors? We're going to get straight to the facts and give you the clarity you need.
Right, picture this. An official-looking envelope lands on your doormat. You open it, and it's about a tax bill. But the name at the top isn't HMRC. Your heart probably just skipped a beat, right? Your mind is racing. Is this a scam? Am I in some kind of serious trouble? That feeling of panic is exactly what we're here to sort out today.
So here's our game plan. First, we'll look at the official link between HMRC and debt collectors. Then we'll see how a small tax issue can snowball. We'll bust some myths about what they can and can't do, and then give you a solid action plan. And finally, we'll talk about how to stay out of trouble in the first place, and when it's time to call in the pros.
Okay, let's get right to the big question. Does HMRC actually hire private companies to chase tax debts? The short answer is yes, they absolutely do. It's a totally normal part of their process, but you've got to understand how it works and, more importantly, why it happens.
So, just as a quick reminder, HMRC is the government body that collects the money for pretty much everything. You know, our public services, the NHS, the roads, the lot. Their main job is to make sure the system works and the money comes in. And that includes chasing up any tax that hasn't been paid.
And we're talking about a mind-boggling amount of money. In the last tax year, they collected over £819 billion. When you're dealing with numbers on that scale, it's kind of inevitable that some payments are going to slip through the net. And that's exactly where these outside agencies come into play.
Now, HMRC doesn't just pass over every single late payment. They tend to focus on specific types of debt that have been hanging around for a while. You know, things like late self-assessment payments from a freelancer, maybe some VAT arrears from a small business, or even tax credits that were overpaid. The key thing to remember is this is never the first step. It only happens after HMRC has already tried to get in touch with you directly and failed.
So, who are these companies? Well, here they are. This is the official list of agencies that HMRC works with. If you get a letter, the very first thing you should do is check if the company's name is on this list. Honestly, this simple check is your best defense against scammers and the fastest way to know if you need to take it seriously.
So how does a simple missed payment turn into a letter from one of these guys? It definitely doesn't happen overnight. There's a whole process. Let's walk through the typical journey, because if you understand the path, you're much less likely to end up on it. See, it all starts pretty simply. First, you'll get a notice from HMRC. If you ignore that, a more formal reminder, a demand for payment, will follow. After that, penalties and interest will start to pile on. It's usually only after about 90 days of silence that HMRC even considers passing the debt on. So the point is, you get plenty of chances to sort it out with them directly first. And it's so easy for this to happen. Let me tell you about Clive. He was a contractor, figured his PAYE took care of everything. But he moved house, missed all the letters from HMRC. Then one day, a letter from BPO Collections shows up. He thought, this looks dodgy, and just threw it in the bin. A few weeks later, he applies for a credit card and gets declined. That's when he found out the £3,000 debt was very, very real. It's a tough lesson. Always keep your address updated and never just ignore official mail.
And here's a quick pro tip to help you avoid a mess like Clive's. A lot of these problems start with a really simple mistake: the wrong tax code. Maybe you started a new job and got put on an emergency code. You can check yours in seconds on the free HMRC app. Seriously, a 5-second check today could save you a massive headache down the line.
All right, let's move on to something really important. There's a lot of fear and just plain wrong information out there about what these debt collectors can actually do. So let's separate the myths from reality.
Let's be perfectly clear. Here's what they can do. They can write to you, email you, or call you to ask for payment, or to set up a repayment plan. But that's pretty much where their power stops. They cannot turn up at your house unannounced. They cannot seize your belongings or your car, and they definitely cannot dip into your bank account. All of those really serious powers, they belong to HMRC and HMRC alone.
And this is a really critical difference. HMRC has its own team of enforcement officers called the Field Force. These are not private debt collectors. These are officials with actual legal powers who can come to your property to take control of goods, but only after a whole formal legal process has been followed, including sending you a notice of enforcement. It's a completely different level of seriousness.
Think about Hugh's story. He missed a self-assessment deadline, got a letter from Past Due Credit Solutions, and just assumed it was a scam. By the time he realized it was legit, the debt had grown by over 400 quid in penalties, and his credit rating was damaged. It just proves the point. Always verify the letter, but never, ever ignore it.
Okay, so we've covered the what and the why. Now let's get to the most important bit. What on earth do you do if you get one of those letters? Don't panic. Here is your step-by-step plan.
It's a simple 4-step process. First, verify. Check if that agency is on the official list. Second, request details. Ask them to send you a full breakdown of the debt in writing. Third, challenge any errors. If something looks wrong, you need to talk to HMRC directly about it, not the collection agency. And finally, step 4, if the debt is correct, talk to the agency and agree on a repayment plan you can afford.
And here's the absolute fastest, most reliable way to verify a debt. Before you do anything else, log into your personal tax account on the gov.uk website. If the debt is real, it will be listed right there. That is your ultimate source of truth.
So why is following that action plan so critical? Well, because if you keep ignoring the problem, the case gets handed back to HMRC. And that's when they can bring out the big guns. We're talking about things like a county court judgment, which will absolutely wreck your credit score for 6 years, or an attachment of earnings order, where they take the money straight from your paycheck. The stakes get much, much higher.
All right, enough of the scary stuff. Let's switch from being reactive to being proactive. The best way to handle tax debt, obviously, is to never get into it in the first place. So here are a few simple things you can do to stay ahead of the curve for the new tax year.
When you look at why people get into tax debt, it's actually quite surprising. Most of it comes from simple, avoidable things. The biggest trigger, by a huge margin, 40%, is just having the wrong tax code. Another quarter of all cases are just from missing deadlines. If you know where the traps are, you can walk right around them.
Now, for anyone who is self-employed or has other income to declare, these dates are your Bible. Get them in your calendar right now. Register by October 5th, file your return, and pay your bill by January 31st. And please don't forget that second payment on account in July. Missing these is what gets that penalty clock ticking. And here's a golden rule for all you freelancers and business owners out there. To avoid that horrible shock in January, every single time a client pays you, just immediately move 20 to 25% of it into a separate bank account, an account just for tax. Do that every time, and when the bill comes, the money will just be sitting there waiting. It's the simplest trick in the book, but it's so effective. Okay, we've covered a lot, and hopefully you feel much more prepared to handle this stuff yourself. But look, sometimes the debt is just too big, or the situation is too complicated, or frankly, you're just too stressed out, and that is the time to call in a professional.
If you're arguing with HMRC about a bill, or you're struggling to get a payment plan you can afford, or you just have a gut feeling that something isn't right, an expert can take that massive weight right off your shoulders. They speak the same language as HMRC, and they know how to navigate this system to get you the best possible result. It's all about getting that peace of mind.
So if you find yourself in a tricky spot and need that expert guidance, the team at My Tax Accountant, who provided all the great insights for today's discussion, are there to help. We've put their details on the screen for you. You can reach them on WhatsApp or give them a call on 07854-255-375, or you can drop them an email. And for more clear, practical advice like this, make sure you subscribe to their YouTube channel. Thanks so much for joining us.